Hello guys, in today's video we're going to be looking at assignment 1 for the second semester in 2018. The question has about 15 questions. Okay, let's start. I've noticed that in my previous video the numbers were really small, so I tried to put it on this presentation like this. So if it's not clear again, please guys let me know, especially if you are viewing from your cell phone. Please let me know, and if you see that okay it's too small, just try to zoom out the screen, basically make the screen bigger. You know that little square that stays at the bottom of your screen. Just make it bigger and see if you can see fully, especially the numbers, they become really small. So now let's look at the first question. It says which of the following documents are the examples of internal documents? Internal source documents, sorry. So the internal source documents are documents that the company generates, mainly when the first transaction is initially uh, being generated. So we have four options. We have original cash purchases invoices. This one is not an internal document. Your purchase invoices, they come from your suppliers. Original receipts, they also come from your suppliers. So the answer here is cash slips or cash registerals. Okay, so this one it's a bit clustered, but let's just try to answer it. Which one of the following is the systematic steps in the financial accounting cycle? So they just want to know the flow of transactions in the accounting cycle. In other words, what steps do you follow? Because obviously when you do your accounting, you don't just start with any step. You don't go and just produce trial balance. You first start from your source and then you then produce your transactions, you pass journals, and eventually then you produce reports. So, for instance, option one says subsidiary journals. No, already that one is out because subsidiary journals are not your first step that you need to do. Transactions, also that one is not the first step. The one that has source documents, you first start with your source document. Either maybe it's a slip, it's a check. Those are the source documents. So you start with that. And then once you've got your source document, then you record the transaction. After recording the transaction, you then see if are there any changes that you need to do. From there, you produce your ledger and other subsidiary ledgers. Then you produce your trial balance and then your final accounts and financial statements. So option 3 is the correct one. And again, option 4 is wrong. Just know that the first step, you first look at the source document. Then you record your transactions and so on. Question 3. Bet owns a business that prints t-shirts and he is taxed on his personal capacity. Therefore, Bet's business is considered to be. So if for instance someone is taxed on his personal capacity, it means that person is a sole trader. So for instance, if you decide to run a business without registering it, let's say for instance you are a doctor and then you decide to say, okay, no, I'm going to run my business, I'm not going to register it. You are a sole trader, you are running your business on your own. You can have employees, but you are the sole owner. So you will be taxed on your personal capacity. The disadvantages of this is that the taxes are really high when you run a sole trader, especially when you start earning big income. Maybe for instance, I know for instance, if I think you are earning over 1.5, you'll be taxed well over 40%. While if, for instance, you registered a company, the tax rate is fixed, it's at 27%. So you can imagine the difference. So it's better rather to just register a company. So the answer here is the sole trade. I just wanted to give you a background so that you will have an understanding and then you'll be able to answer questions even if they come in a different format. On 1 January 2018, Mechanical Services bought a toolbox and tools on credit from Motor World for 8,000. The effect of these transactions, the effect on these transactions on the accounting equation of mechanical service will be as follows. On this question, I want to open my Excel so that I can explain again how assets work, because here we bought tools and tools box on credit. So tools are assets, and we've already discussed that assets, they increase on the debit side. So if you're buying more assets, you will increase them on the debit side. Allow me to open the Excel spreadsheet. I'm just going to make this one a little bit bigger because I've seen. So let's say, for instance, you're going to have your line here. Okay, let's just say we're opening our ledger account. Okay, this is basically your ledger. This is your account. Okay, let me just delete this. It's a bit too wide now. So this is basically your ledger. This is your debit. This is your credit. Okay, let me just try to zoom it even further so that you guys see. So in this example, they went and then they bought assets. So every time when you buy assets, you put them on the debit side. They increase on the debit side. This is when you buy, they increase here. So this is how that asset is going to be recorded. So every time, let's say you go and you buy another asset for whatever, 20,000, you put it on the credit side. Then let's say, for instance, now these assets, some of them you want to sell them, you obviously put them on the credit side. Let's say this tools box, you decide to sell it and then you're selling it for instance, 5,000. After some years, maybe after 2 years, for instance, you would put it on the debit side. So this is how assets behave. Going to jump back into our question. So we bought assets, so we know that, okay, our assets will increase, and we bought these assets on credit. So both our assets are increasing and also our liabilities. Let me go back again to our examples. So these are assets, right? I'm going to show you how liabilities then behave. Liabilities. So liabilities, they behave in the opposite directions to asset. So every time when you, for instance, want to increase the liabilities, you'll increase them on the credit side. So for instance, if you go and borrow more money and then you're borrowing stuff on credit, you're gonna increase that on the credit side. Let's say you go and then you get another loan. You say you get a loan for 100,000 from the bank. That amount will go onto the debit side. I mean on the credit side, because that's where the liabilities increase. Now, when you start repaying those liabilities, let's say for instance this loan, for instance, you want to repay it now, you'll put it here. Obviously, you'll pay it in installments. So you'll put it on your debit side. Then it's that simple. Okay, let's then move on to the question and see what it says. So assets will increase, yes, that is correct. And also liabilities will also increase, that is correct. Let's see what other options they said. Assets will decrease, no, they're not decreasing, this is wrong. Assets will increase, yes, they will increase. No, liabilities will not increase, will not decrease. Assets will decrease, no, that's also wrong. So the correct answer is this one, option 1. Number 4, the debtors will be classified as debtors are classified as current assets. Current assets are those assets that you can easily convert to cash within 1 year. For instance, your debtors are people that owe you money. Those people can come tomorrow and pay you. They can come next month, because most of the time when they open an account, they will tell you that, okay, the account is a 30 days account. So assets are classified as current assets. Debtors are classified as current assets because these are people that are owing money, and we said assets are the resources that are controlled by the entity as a result of the past events of which future expected flows are expected to flow into the entity. Because you're expecting to get money from these people, these are definitely assets and they are current. Which one of the following is not a liability? So you have accrued expense. I will cover this in the next topics in detail, like, to define exactly what are accrued expenses, what are income received in advance, because we haven't really covered that topic. So I'm going to cover accrued expense, income received in advance, prepaid expenses, and accrued income. But let's look at this question for now. Which one of the following questions is not a liability? Let's see. Accrued expenses are liabilities. Basically, accrued expenses are money that you still owe. So, for instance, let's say you are paying your internet services every month. Let's say they charge you 500 Rand, and then, but you haven't paid for December, and already we are in January. So you owe the month of December. So that December month expense is an accrued expense. You owe those people money. Or insurance, for instance. Let's say you've skipped 1 month. That amount would be recorded as an accrued expense. So that one is no man. Accrued expense. Let me think. It's a liability actually. No. Accrued can't be. You owing these people is definitely a liability. This one is definitely a liability. Sorry, the thing is I haven't really gone through these questions before. I'm going through them for the first time. So this one is definitely a liability, accrued expenses. Capital is not a liability, it falls under equity. Long-term loans are liabilities. Uh, income received in advance is also a liability. So yeah, the correct answer here is 2. It's capital. Capital is not a liability. But accrued expense is basically the money that you owe. Capital is equity. Long-term loans is straightforward. It's a liability. Income received in advance, it's also a liability. So what income received in advance is, when it's when you have received money for service that you have not rendered. So some customers can come and say, okay, I'm paying you this for January. Let's make an example with the internet services. Let's say every month you are paying 500 for internet services. But because, let's say, for instance, in this month you received your bonus, you decide to say, okay, no, I'm gonna pay for the next month as well, because you have money and you wanna pay for the next 2 or 3 months. Then you go and you pay. So the company that is receiving that money, they are going to record that money as a liability because they haven't really provided that service to you. So they owe you that money. So it's a liability. Yeah. So the correct answer here is 2. I'm sorry about the delay on the accrued expense, but definitely the answer is 2. Grace buys and sells furniture. Grace sold 100 chairs to Lulu Furniture for cash. Okay. Which one of the following statement is correct regarding the effect of the transactions on the accounting records of Grace? So he sold furniture for cash. So it means our bank balance received money. So, and bank balance is an asset. So our assets increased and also our sales increased. And when our sales increase, that also increases our equity. So what happened here? Assets increased and equity also increased. Let me look. That's option 1. And then option 2 says assets will increase, which is correct. Equity decrease. No, the equity did increase. When you sell something, your sales they increase equity, but your expenses they decrease equity. So 2 is wrong. Assets will decrease. That's wrong. Assets will decrease. That's also wrong. So the correct answer is 1. Option 1. Okay, this question is coming from. Okay, let me just see. I remember this one. Yeah, so this one is coming from there. Yeah, here's a question. I hope you guys can see the amounts and everything is clear. So it says use the information provided below to answer questions 8 and 9. The following information was taken from the records of VW traders. Now, what is the question? The question, what is the total amount of income? Let's see. This one is not an income. It's clearly stating that it's an expense. Advertising is an expense also. Petty cash is an asset. Inventory is an asset. This is an income. And this is also income. This is income. So basically your income is these last three. Let me just add them on the side. So the income is 33,678. Let's just check if we've got this amount 33678. Yeah, we've got that one. So that one is option number 3. Okay, let's move on to the next one. What is the total amount for expenses? Let's see. Expenses. Okay, these ones we've already said. The expenses are these top two. This one, I'm just gonna sum them up again. 4.1. Let's see if we've got that option. Yeah, we've got it's option 2. So that one is straightforward. So your expenses, let me just highlight them. These were your expenses and these were your incomes. Let me put a different color. Okay, yep. Okay, let's move on to question 10. Okay, again, question 10 is coming from, it's coming from this table here. Again, it says use the information provided to answer questions 10 and 11. The following information was taken from the accounting records of ABC dealers, right? What is the question? What is the total amount of current assets? Okay, land and building, it's non-current. The land can stay for whatever, forever, so it's non-current. Capital, this is equity, so they are looking for assets. This one is long-term loan, so this is non-current liability. This is an expense. This is income. This is a non-current assets. This is an expense. This is bank positive balance. So this is an asset. I'm going to first highlight it. First, liability, another asset. Basically, there's two assets. I'm going to just sum them again. That plus that, you have 270 on assets. Let me double check. They want current assets here. Let me check. Yeah, 270 are the only two current assets that we have. So the reason why they told you that a positive balance, because sometimes the bank balance can be a credit. In other words, you have an overdraft, you are owing the bank. So in this case, they told us it's a positive balance, so it's an asset. So the answer is 270. The next one, what is the total amount of non-current liabilities? Okay, let's go back. Long term already. It's stating it's long term, so it's non-current. Just want to make it more colorful. This is an expense, this is income, this is an asset, this is an expense. This is a liability, but creditors are current liabilities. So basically, let me see. They want what? Non-current. So non-current is 45. Just this one on. Let's just double check. Equity, expense, income, assets, expense, liability, but this is current. They are looking for non-current. Yeah. It's 450. Yes, we have. That's option 2. Now let's move on to question 12. My yellow traders received 114,000 from the credit sales of goods. What is the total sales exclusive of VAT if the VAT rate is 14%? I did cover this on my previous video, but I saw that my calculations were again very small, so you guys might have not seen it. So I'll cover it again now. I'm going to go and open Excel, and I'm going to zoom this thing out and probably make it bold. So they are saying they want what is the total amount excluding VAT. So they want amount excluding VAT. They've given us an amount including VAT. So they've given us 114,000, right? This amount is inclusive of VAT. Okay, let me zoom it even more, guys. Sorry. I really don't want to repeat that mistake that I made last time. So this amount is including VAT. So I'll just say it's inclusive, right? If you want an amount, what is the total sales exclusive of VAT? If you want an amount that is excluding VAT, because they said it's 14%, right? So you take the amount that is including VAT, you times it by 100 and divide it by 114. Basically 114, it's 100 plus the 14 that they've given you. Then you'll get an amount excluding VAT. And another way of doing this is option 1. Another way of doing this is you take the amount that they've given you and then you times it by 14, you divide it by 114. That will give you the VAT portion, the VAT amount. This is a VAT amount, right? So once you've gotten the VAT amount, you then take the 114, you take out the VAT that they've given you, and then you are left with the amount exclusive amount. Yeah, there's just a couple of ways of doing this, but yeah, this is just one of them, or two of them basically. So this is option 2. I hope this is clear. So in this case, we took, here's the formula here. Let me also take this formula and, sorry guys, just gonna take this formula so that I can show you. I'm gonna put it here. This is what it looks like. This is what you're gonna punch in your calculator. Actually, let me just type it in. It was 114. It's 114, you times it by 100 and then you divide by 1/4. The VAT rate has changed. It's now 15%. The reason why here in this example they are using 40 is because this is an old question. It was 2018. So in your case, chances are it's going to be 15 here. So if it's 15, you will take the amount including VAT, you times it by 100, you divide it by 115. It's the same with this one. Let me just again copy it. And then I'm gonna so you take 114. Yeah, this is what it's gonna look like for you to get this amount. And then this one is simple, straightforward. You just take 114, you minus the 14. So I hope this is clear, guys. Please let me know if you need any help on this because it can be very tricky. But the more you practice, and I'm gonna try to give you more questions on this, so that you'll understand it. Oh no, I forgot to check the answer. So what do they want here? What is the total excluding VAT? It's 100,000. We've already worked that out. There is 100. We've worked out in 2 different examples. It's 100,000. Okay, the following statement describe the effects of the transaction that may have on the elements of accounting equation. Yeah, okay. Assets can be increased and decreased by the transactions, by a transaction. Yes, this is true. A is correct, guys. A is correct. Liabilities can be increased and equity decreased. Liabilities can increase. I don't think B is correct. Liabilities can be increased. And no, C is not correct. Liabilities can be increased. So I know for sure AD is correct. So let me look at the option that has got my option. So it's AD. So B must be correct. Because C, let me see C. C can be right though. Liabilities can be increased. No, C is wrong. So the answer is A, B, D. Yeah. The answer is A, B, D. Yeah. But let me look at B. It says liabilities can be increased. Oh yeah, B is right. So I guess I should give you an examples of each one of these. Like for instance, A, when the assets increase, and the reason why I said A is correct is because, for instance, if you go and let me see, let me think of an example. Assets can be increased and also decreased by the transaction. Yeah, that's true. So for instance, the example here, the example A, where assets are increasing and decreasing at the same time is when maybe, for instance, you go and you buy maybe a car, right? When you go buy a car, your assets will increase because you've got more vehicles now. And then the instance that the same transaction can also decrease your assets is because your bank will be out of money. So your asset, your again, your another asset also is also decreasing. So your assets, your vehicles are increasing, but at the same time, your bank balance is losing out money. And then liabilities can, asset B is correct, liabilities can be increased. And so here is when maybe you go and then you borrow a loan from the bank. Your liabilities will obviously increase. But the reason why your equity will decrease is because of the interest. Because interest is an expense that will also reduce your liability. And then I ruled out C. I said D is correct. So liabilities can be increased and asset. So example, I mean the option D, I said is correct. The example for that is when maybe again you go and buy a car, but this time you buy it on credit. So your liabilities in that case will increase. At the same time, your assets will also increase because now you bought a car on credit, you're owing more people, and but you also have an asset, so your assets are increasing. So yeah, that was that. I hope this was clear, guys. I'm sorry for the delay, but yeah, the correct answer is the one with A, B, and D. It's just that I haven't really looked at this question. It's first time I'm seeing them, and I don't have the UNISA solution for it. So, but yeah, I feel confident with these answers. I think they're quite correct. Let's look at this. Tower issued a business check to pay the water and electricity expenses of the entity. Which one of the following statements regarding this transaction is correct? So basically, because they paid using cash or check, sorry, our bank balance will decrease, of which it decreases on the debit side, and also our equity will also decrease. So we must look for that solution where our equity is decreasing and also our assets are decreasing. The first one says equity will increase, no, wrong. The second one says equity will decrease, yes. And the water and electricity expense account must be credited, it's wrong. Because expenses, you must increase them on the debit side. So this one, it says it must be credited, so it's wrong. And then option number 3, it says equity will decrease. Yes, that's true. And the water and electricity expense account must be debited. This is correct because your expenses must be debited. If you increase your expenses, you debit them. Then option 4, it says equity will increase wrong. By just looking at it and it says equity will increase, so it's already wrong. So yeah, so the correct answer is when your equity is decreasing and as well as you are debiting your expense. Finally, the last one, we've made it, guys. Which source document will be used to prepare cash receipts journal? Duplicate receipts, petty cash voucher, check counterfoil. It's check counterfoil. That's what you're gonna use to prepare your cash receipts journal. I think we're done, guys. That's about it on our video. Thank you so much. Please let me know if it's not clear enough this time, and I hope it's fine now. Thank you so much, guys. All the best.